Welcome everyone. I'm Rachel Littman, Yale class of 1991 and the Executive Director of the Yale Alumni Nonprofit Alliance, otherwise known as YANA, which we also like to say stands for You Are Not Alone. So coming together online for these webinars and other town halls certainly lets us know that we are not alone and we are a bigger community. Before I pass the screen over to our guest speaker, Jennifer Mitrenga, just a couple of housekeeping matters. First of all, during the course of the presentation, I will be checking the Q&A and the chat function. So if you have anything, let me know and I'll try to pass those along. If not, we'll have ample time at the end. And this is a webinar format, and I know a lot of people are new to this kind of system. Sometimes they're town halls, sometimes they're webinars. For right now, you will only be able to see me and Jennifer as the host and panelist. I think the chat function should be on if you want to speak with each other, but other than that, this is more of a watch, listen, and send us your questions. Also wanted to alert everyone that there's new material on our website, including some resources related to COVID-19 and what nonprofits can be doing during this time period, as well as more invitations on some upcoming webinars. We have one on the 20th about how to approach new charitable projects. I know people have a lot of questions about that, so you're going to want to tune into that. We have another one beginning of June. We have a European chapter on get together on the 13th. So keep an eye on your inbox, keep an eye on the website. Let us know if there's anything else we can bring to you. And of course, I hope everyone is healthy and as safe as can be during this time. So thank you for supporting YANA. Okay, before I hand this over, let me introduce our guest speaker, Jennifer Mitrenga. She works for Figure Technologies as the head of America's Provenance. She works with blockchain technology in the financial services industries, and it's a technology that also is used for product origin and tracing and lots of other uses. And I'm sure Jennifer will tell us what blockchain is, how it can be used for social impact. Jennifer has a deep background in finance, entrepreneurship, and data science, and she's also been involved in a lot of nonprofits, very well-versed in this field. So Jennifer, thank you. I'll put myself on mute, hand this to Jennifer, and feel free to ask your questions. Jennifer, thank you.
Great, thank you, Rachel, and really appreciative of the Yale Alumni Nonprofit Alliance for the opportunity to talk a little bit about a subject or two subjects today that I'm really passionate about, being blockchain and social impact. So I'm going to share my screen here. And Rachel, maybe you can just confirm that you can see my screen before I go into present mode.
Yes, I can see it.
Okay,
yes.
Great. Thank you. Wonderful. Okay, great. Well, again, thank you for the opportunity to share a little bit more about blockchain technology and the role that it can play in the social impact space. We are going to spend the next, hopefully, hour or so together, and I've laid out a fairly simple agenda. For those of you that may be more familiar with blockchain, bear with me in the first part of this because we're going to go through a little bit of primer. Over the last number of years, there's been a lot of, I would say, just miscommunication around the difference between blockchain and Bitcoin and cryptocurrencies, and so we're going to start with some of the basics, and then we'll build into very specific use cases and applications. So we'll start with what is the technology, what makes it really unique, the history of this fairly nascent industry, the types of blockchains, what makes it so impactful. We're going to talk about three very specific applications in the digital identity, financial inclusion, and health space. And then would love to open it up for questions to the group so that we can make it as dynamic as possible. First, let's just start with what is the technology. At its most simple form, it's really defined as a decentralized distributed ledger that records the provenance or origin of any digital asset. And it has a series of unique characteristics that we're going to go into more detail on as it relates to the use cases. being immutability, which is really important because that basically just means that it cannot be altered. And there is a clean record of any edits or changes that occurs. A timestamp series record of data that is distributed and managed by more than one central body. And for those of you, I put in a few quotes here because while this industry is fairly nascent, being 11 years old, I really believe that this is one of the most innovative technologies to hit our planet in the last number of decades. And I think it's going to fundamentally alter the way that basically every industry works moving forward. And there's a couple of quotes that I just wanted to bring up, and key folks that have played fairly strong roles in the community and in the development. The Hyperledger project, which spun out of IBM, not since the web itself has a technology promise broader and more fundamental revolution than blockchain technology. We believe that the economy works best when it works for everyone, and this new platform, blockchain, is an engine of inclusion, and we'll talk about that when we touch on digital identity and financial inclusion. And I believe that the blockchain is even now ushering in a new economic and social paradigm that will rival, if not exceed, the impact that agriculture had in human society. So let's dive into some of the key features of the technology. What's unique about it is that it cannot be corrupted. Because the data is encrypted, it's very difficult for data to be accessed, particularly in permission-based blockchains, and we'll talk about that. It's a decentralized system, which means that there is not one central authority. And that's going to be really critical as you hear about certainly vulnerable populations that are at the whim of governments or financial institutions for current access to the economy or markets. Enhanced security, that touches on, again, the encrypted nature of the data. The distributed ledger, that basically means that there's more than one copy of the same ledger. And so if one copy is altered or tampered, the system knows. And in order for that to be valid, it needs to be validated by the full set of distributed parties. There is a consensus mechanism, and we'll talk a little bit more detail about that. There are a variety of ways in which consensus or validation can be ascertained. And there's a very strong difference between what I would say proof of work and proof of stake consensus models. And we'll talk a little bit about those differences when we get into the types of blockchains. And then faster settlement. So one of the very unique features of leveraging a digital ledger and technology is that it, in essence, removes all of the current third parties that exist today in highly regulated industries like financial services, like law, like healthcare, where there are tons and tons of third parties that basically create trust in a system because two parties don't trust one another. And we'll go into more detail on that. Let's talk a little bit about the history of blockchain. As I said earlier, it's a fairly nascent industry in the sense that one of the inaugural events occurred in 2009 when an anonymous writer by the name of Satoshi Nakamoto published the first Bitcoin white paper. While there had been a number of scientists looking at different aspects integrated into that paper, it was really the Bitcoin white paper that kicked off the origin of the industry. For those of you that are not as familiar, Bitcoin was really the first cryptocurrency that was created, and it was a peer-to-peer electronic cash system. And the white paper was really focused on how individuals or parties could transact cash within one another in a digital system without intermediaries and across borders. In 2010, the very first Bitcoin purchase took place. And really between 2010 and 2012 to 13, Bitcoin was the primary cryptocurrency around the technology. In 2013, another white paper was released, the Ethereum white paper. And this really moved from kind of the traditional cryptocurrency model to a more enterprise-based system that focused on applications that were driven by what's called smart contract technology, and we'll talk a little bit about that in a bit. In 2014, the first consortium model was created, R3 was founded, and there became kind of an inception of enterprise type organizations that were focused on ways in which the technology underpinning Bitcoin could transform a number of industries. 2015 was absolutely the year of smart contracts. A number of, and for those of you that are not as familiar with smart contracts are computer protocols that are intended to digitally facilitate, verify, or enforce a negotiation between two parties in a contract. So think of it as an agreement between two parties that's in the form of a computer code. And what it does is it allows transactions to be sent via the computer or via a digital ledger without having a third party review it. And so the trusted nature of that contract is facilitated on the chain. And that's going to become really important because while the fundamental rails associated with the blockchain technology are important, it's really the secret sauce of blockchain is smart contracts. 2016, 2017, we started to see the rise of a number of other cryptocurrencies, and infrastructure in the system was a core focus of development. 2018, we started seeing some of the very first enterprise proof of concept projects, and 2019 focused on use cases. 2020, I would say, is a year where we're really seeing increased adoption by a number of sectors and proof of concept pilots really moving into more full-fledged production case scenarios. So a little bit more primer, let's talk about the difference between public and private and consortium blockchains. Public blockchains are blockchains like Bitcoin or Ethereum, where really the primary focus is cash movement. And so anyone is able to access it. Participants are not permissioned, so there's no gating criteria to becoming a member on the chain, and your identity can be anonymous. Security, it can be, consensus is a critical piece of this security. The majority of public blockchains are generally proof of work versus proof of stake. And the transaction speed can be incredibly slow because of that consensus mechanism. And so typically you'll see that it may take, computers and algorithms to run, hours and days. It's generally not the most socially impactful because of the impact on the environment around the mining community. And so what we've started to see is while the early public blockchains are still in existence and there's a lot of, focus on, the price of Bitcoin, we're seeing the emergence of private and consortium blockchains really emerge certainly over the last 3 years. So private blockchains are generally a single organization as the governing body for that blockchain. Participants are permissioned, so there's an element of whether it's KYC, AML, or authentication that occurs. The parties in general are known to one another, and the security is focused on kind of pre-approved participants, and that small group of participants have voting rights or often governance rights on that chain. In general, the transaction speed tends to be lighter and faster, and the proof of stake is proof of stake and proof of work can be a part of those chains. The examples.
Before you move on, we've had some questions. Could you describe and explain what proof of work and proof of stake mean?
Yes, absolutely. So proof of work and proof of stake are two different forms of consensus, and I'll walk through both of them. Proof of work in general is a consensus algorithm, and that algorithm can be programmed to confirm transactions and new blocks are added to the chain. So with proof of work, there's a set of parties that are called miners that compete against one another to complete those algorithmic computations. And so you may hear about thousands of miners across the world buying, servers and helping add to the blocks associated with Bitcoin. It's a fairly inefficient way to, to create new blocks, but it was very, very integral to kind of the early state of the public blockchains. It also allowed those miners, as they completed those algorithmic puzzles, to get compensated in Bitcoin or in other cryptocurrencies. And so it was really the preferred first or inaugural set of consensus models. Admittedly, it uses a ton of energy. It requires a lot of data storage and connection. And so we're starting to really see proof of work no longer be the preferred method, particularly as highly regulated industries and companies are looking to private chains to and a quicker way to approve transactions. So proof of stake is really focused on the distributed nature of what we call node stakeholders. And so permission chains can have any number of nodes that serve as the validators in that proof of stake network. And generally, proof of stake means that they've either purchased a percentage of that cryptocurrency, and as a part of that purchase, they have the right to validate transactions. A number of the private chains may have, a few dozen or 3 dozen node stakeholders in proof of stake, and it allows for just much faster and a more curated environment of stakeholders. In the financial services sector where I work, blockchain proof of stake models generally will have large global financial institutions like JP Morgan or Goldman Sachs or UBS or selected curated parties that generally would be competitors of one another serve as the nodes or proof of stake nodes in a blockchain. Great. And really the key benefit to proof of stake is that it can be done much faster. It can be done with a smaller set of parties that are directly relevant to the particular ecosystem that's on the blockchain. And it allows for scalability, which is one of the biggest challenges facing public blockchains today. As permission change emerge and more data is flowing through that blockchain. In general, blockchain technology can be slow because of this distributed nature. Having a proof of stake model allows for a much lighter and faster speed of transaction and scalability across global borders. The federated and consortium blockchains, we'll talk a little bit about that. R3 really led the way along with the Ethereum or the Enterprise Ethereum Alliance. And those are really, think of consortium models where hundreds of parties in a particular industry are coming together and wanting to leverage the technology for a series of use cases. And so one of the primary, so R3 plays a big role there, Hyperledger Fabric. The challenge there is when you have 300 parties or thousands of parties, it becomes more difficult to make decisions because everyone has a right in the governance. And so while we saw a lot of the federated and consortium models come out in 2016, 2017, they haven't been able to make, admittedly, as much progress as some of the private blockchains because of the, the decision-making components. So let's go into a little bit more detail around why blockchain can be so impactful. As I mentioned earlier, there's no central authority. So the idea of having a set of distributed parties that are validating transactions means that there is no one party or approver. The other really unique feature of blockchain is that every member on the chain or participant owns your own data. And when we talk about use cases in identity or in healthcare, this becomes really effective. There's increased transparency of digital assets. For those in the financial services space and in industries where there are just really a liquid or lack of transparency to that asset, the blockchain allows for a much greater level of transparency around asset performance, around the exchange of the assets and ownership. Ultimately, blockchains can allow for immediate settlement and liquidity, and this becomes particularly relevant in the financial services use case. as well as the globalization of governments and large NGOs. You own your own money on the blockchain, so similar to the data, there is no third party that is holding your wallet or verifying what your ownership of the asset is. Because of the encryption, it allows you to keep your ID and any form of personal information safe. It cannot be destroyed. So the provenance and the ledger of, think of the ledger really as a global audit trail of any asset or market that you are looking to note. And so while amendments can be made, if those amendments are verified, the full trail of those amendments is viewed from inception, which is really interesting. And we'll talk about some applications of that. It serves as a store of value. It's an immutable store of record keeping. And it really provides equal access to products and markets for more vulnerable populations. As I said earlier, the use cases and applications for blockchain are very widespread, and similar to the way in which internet technology transformed virtually every way in which we interact with industries today. I believe that blockchain is going to do the same. It holds a huge amount of potential to disrupt, equal opportunity and access, creating a more even playing field for people across every continent, every longitude and latitude, and the value that they create across different industries. We only have time today to really go into 3 specific use cases, but you'll see just from these charts here, from the legal environment to the food sector, to agriculture, to energy, to government, to education, to insurance, to healthcare, this technology, there are a number of pilots and proof of concept projects that are touching on each of these industries. So let's lead with digital identity as kind of the first use case that we're going to go a little bit deeper into. Today, the World Bank estimates that over 2 billion people on the planet are unable to provide or prove their identity. Most of these people come from very remote, underserved regions. And leveraging this technology to build and deploy digital identity solutions, if it's applied correctly, it holds the promise to really reduce fraud, increase transparency, and efficiency. This is obviously applicable to the audience today because several organizations are changing digital identity in the developing world with blockchain solutions, making it easier for nonprofits and commercial entities and governments to track, aid, to enable more underserved populations to access a wider variety of economic services. Just to give you a little bit of context, without a provable identity, and most of you know this, people can struggle to access a wide range of critical services. So they may be limited from accessing or opening a bank account, so financial services, or obtaining credit, social benefits like food stamps or vouchers or pensions or cash transfers. One of the interesting problems that we're looking at right now with the PPP program in the US government is that for folks that are underbanked or unaccessed to bank solutions in the US, unique ways to leverage blockchain to provide stimulus checks to people that really need it most. It can also focus on healthcare benefits like insurance and vaccines and maternal care. And so we're going to talk a little bit about what that looks like. The technology has kind of several key advantages over current solutions in the digital identity space because of the increased efficiency and the reduction in cost. The blockchain allows it basically close to impossible to fraudulently change past data. And this can be really relevant, particularly for people that are altering identification or need to provide photos or pieces of information to governments or banks in order to access these unique services. Some of the challenges, admittedly, in the digital identity space are, that there are a few. For example, one of the challenges that a number of NGOs are facing right now is right to be forgotten laws. And so if the data is immutable, but people have the right to delete their data, how do those two issues kind of resolve? One potential solution to this problem is to better anonymize the data so that sensitive data is not as publicly viewable. And one of the unique features of permission chains is being able to actually anonymize that data, which may reduce that conflict. A number of proof of concept projects came out of digital identity, particularly with the World Bank and the UN back in 2014 and 2015. This was actually where I became really passionate about the use of the technology, but we really haven't seen a widespread cross-border use of digital identity. In the US, we've looked at it across the driver's license kind of environment, or issuing passports on a blockchain solution. I would say we're still very much in the proof of concept phase with digital identity. An example of a company that that is tackling this this problem is a company called BankU, and they're very much focused on kind of the world's 2 billion unbanked population. They're a US-based technology company. They're structured as a for-profit model, but have spun out nonprofit entities alongside it to help with their R&D research. They created a blockchain-based software as a solution that allows unbanked populations across the globe to run that software on their cell phones. So it allows them to record their economic and financial transactions, purchase goods, prove their existence in global supply chains, which in essence allows them, because they don't have access to a birth certificate or land rights or other documentation that would generally allow them access to more traditional economic features, they use the cell phone and the software to create almost a credit profile or a history of their ability to repay or connect with local providers. And it allows them to create kind of an economic passport that enables them to engage with organizations that they wouldn't have otherwise been able to engage with. They're currently focused in 6 countries right now, mostly in Africa and India, mostly farmers, micro businesses, and some of the governments associated with those countries. So if you get a chance, feel free to check out their website, and they're a really good example of a company that in a for-profit model is driving social impact through digital identity on their cell phone. Digital identity plays, as we just talked about, really well into the concept of financial inclusion. As we know, more than 2 billion plus individuals across the globe lack access to some of the most basic financial services, and as a result are not able to get access to health, education, and economic entrepreneurship opportunities that others do. And so one of the core, I think one of the core use cases for blockchain technology is enabling financial inclusion. And it starts with the financial identity piece. When someone is able to prove who they are and create a history or a track record that's immutable of their identity, it allows them to then have access to insurance, healthcare, save, borrow, versus have to dig a hole in their mud hut and hide cash, or purchase agriculture or animals in order to do that. And what's really unique about the technology revolution that we're seeing across many of the emerging market countries is that the cell phone really becomes the platform for the technology. And this allows for a decentralized global bank account, particularly in countries where the government controls inflation. Having a peer-to-peer store of value that can be transferred via the cell phone to parties allows for people to not have to worry about inflation in the same way that they would. So in countries like Venezuela and others where inflation rates are skyrocketing, we're seeing a really significant number of cryptocurrency and blockchain applications so that people are able to weather the economic storm that's currently occurring. One of the big use cases here is really payments and global remittances. And so as the world becomes more connected, people live in different countries, there's a massive market of individuals that are sending payments back to family members or friends around the globe. Every time a payment is made, there's a third party that generally takes a piece of that payment on the front end and the back end. And blockchain technology allows for a faster settlement and no third party fees in that process. And so particularly for financial inclusion, when people are living on $1 or $2 a day, those fees become really significant. And so when it's eating up, 30 cents on your dollar or 40 cents on your dollar, having the ability to leverage more of your own capital for the things that you need and for your family becomes really important, and allows you to get access to a broader global economy in a more effective way. An example of a company that, or a case study that's focused on financial inclusion, while we talked about a for-profit model in the previous use case, I'm going to talk about one that's a foundational model. So the case study is Moja Loop, which is a Gates Foundation level 1 project. And while there's a number of digital money solutions for the unbanked out there, customers can currently transact with others who use the same service, which limits the reach of mobile money in general. And so Moja Loop was created as an open source code, which makes it easier for financial providers to achieve interoperability among the carriers or providers, which allows for a single payment platform for end users. And so Moja Loop employed a protocol that's called Interledger for connecting different ledgers around wallets and national payment systems. And it allows for a completely traceable transaction that can be audited by regulatory bodies across borders. Moja Loop is clearing in literally milliseconds and can defer net settlements almost immediately at almost zero cost to the transferees. And so this becomes really effective as we talked about keeping the capital in the hands of the people that need it most. They piloted this software across Africa, Eastern Europe, and parts of India. It's still, I would say, in the first deployment occurred in early 2019, so it's still in, I would say, early phases of development. But the concept of interoperability was really important here, because as technology infrastructure across countries and borders is varied, having that ability with a ledger to connect those payment systems to one another is really critical. The big challenge with a project like Moja Loop in general, and you're testing it across multiple countries, is regulatory approval. And because you're connecting with payment rails and fiat systems, the governments and the regulators, do get involved, which can oftentimes slow the process. But the Gates Foundation is probably one of the largest supporters of, certainly for financial inclusion, leveraging unique technologies like blockchain for impact. All right, let's switch gears a bit and talk a little bit about applications of blockchain in the healthcare space. And I'll start kind of at the macro level, because I think we can all kind of relate to, over the past, 20 or 30 or 40 years, how many doctors have you seen? And, if you've lived in different parts of the country or different parts of the world, we've all clearly felt the pain of our medical records getting transferred from one doctor to another. Or, I find that every time I go to a dentist, they want to run my x-rays again and get access to data. And so one of the really interesting applications around blockchain in healthcare is rooted in medical records. And so this becomes, applicable across a number of sectors, as you can see on the right. Obviously, healthcare data, EHR, monetizing patient data, history of medical history and insurance, and then there's a number of interesting healthcare currencies that have come out as well. I would say that in general, healthcare was late to market in blockchain versus the initial applications in identity and financial services. 2019, 2020, really, we've started to see a number of companies come to the table around this sector, particularly as certain countries around the world, healthcare systems are not as attractive as some of the other countries. I would say, in general, applications in this sector are tied to digital health records, pharmaceutical supply chain management. We can talk a little bit about that, but it allows for really a more secure and efficient way of transferring assets and goods that versus the current system today. As I said, blockchain initiatives in health started a little bit later than other sectors. 80% of the initiatives today that fall into this category are in the for-profit space. And so I think there's a really interesting opportunity for the nonprofit sector to jump in here and help create kind of public-private partnerships that move this technology more mainstream. I'm just checking on time here. Let me give you an example of a company that's tackling a use case in this particular sector. There's a company called Modem.io, which is based out of Europe, and in Europe in general, 90% of pharmaceutical shipments are last-minute deliveries that occur between distributors and doctors and hospitals. And for these really high-volume, low-value shipments, conventional methods for temperature monitoring or cooling are super expensive. And so because in the EU, the European Commission has required that good distribution practices are compliant with kind of proof of temperature conditions. And so Modem was founded in Zurich. It offers kind of an interesting passive monitoring system. So they created hardware sensors that are placed in each pharmaceutical package. They track the temperature conditions of that product while in transit across multiple parties and multiple borders. The sensors are unique because they can track that temperature among other factors for weeks on end and can be reused. So upon delivery at a particular location, the sensors can be reused for another product. They use blockchain to power this network to ensure that the data originated from a particular sensor that has not been tampered with along the way. And that data is really important because the pharma distributors have to meet these requirements and provide validation or records of that keeping. And so the blockchain in this scenario really allows for a complete record of, at every step in the process, that drug, who touched it, where it was at, and did it comply with those practices from inception to distribution. This company is interesting. They've done three pilots right now. They've been mostly focused in Europe, but are in discussions right now to potentially move to the US and to Latin America. And so I think it's one that you'll be able to hear a little bit more about over time. So while we talked about three very specific sectors and use cases, I wanted to just highlight some questions that I think are important if you're sitting in an organization or are a leader in an organization where you're thinking about, could blockchain be relevant to our business? The first is, how much privacy does the application really require? And this goes back to the difference between a public or a permission chain. Most of the familiar chains are public or slightly permission, but as new come to the market, you really want to think about who are the parties that are going to participate in this in the ecosystem, and how much privacy and data is really is needed to be passed to drive what types of a rail that you would look for on the blockchain side. To what scale do you plan to grow your application? Is this going to be something that's very niche in nature, or is it something that's going to go across borders? How many countries, parties, government stakeholders are going to be included? How do digital assets fit into your strategy? Most blockchain technologies have a cryptocurrency associated with it. there are generally two types of cryptocurrencies, utility tokens or security tokens. Think of utility tokens as the right to use that token in a particular ecosystem. And the best example that I give with that is, when you go to, Chuck E. Cheese with your kids, there's Chuck E. Cheese tokens. I would think of that type of a token as a utility token, right? So do you need that token in order to access a product or service on the blockchain? Security tokens are a little bit different and are very specifically related to, I would say, more of the financial services sector, where you're looking at digital assets that are in fact securities. And so security tokens are generally subject to a much higher level of regulation than utility tokens, but are very particularly unique to, I would say, the financial services sector. How are the unique features of blockchain applicable to your use case? As I said earlier, there's three features of blockchain that are really important. The first is that it's distributed, meaning that there are multiple parties validating the transactions in the ledger. The second is immutability, or data not being able to be deleted or deleted. It can be appended or edited, but there's a complete record of that. And then the third is trustless. So the idea of eliminating third parties and leveraging smart contracts or code to create trust between two parties. And so really thinking about how that distributed immutability and trustless features of the blockchain could apply to problems or challenges that you're facing today. I won't go into a ton of detail around governance and economic models. The economic model is directly tied to the token associated with that ecosystem. Governance is really important, though, particularly in the nonprofit space. And what you see is across the public, kind of private and consortium chains, governance or the right to make decisions around that ecosystem can oftentimes be very simple or very complex. And so you really want to think about who are the stakeholders in the ecosystem and the technology that you're using, and what types of governance models make the most sense. So with that, I'll stop and pause and see if there are any questions that the group has.
Thank you, Jennifer. That was really terrific. If you like, I can read you some quick ones. People had some questions from sort of preliminary background ones, and then we'll maybe move into a little more detailed ones. Some of the folks wanted to know, why is blockchain harder to hack than other technologies, and is it really free from fraud?
Yeah, so in general, the features around security with blockchain are rooted in two things. One, it's data encryption. And so the encrypted data on blockchains in general makes it more secure. There are also, and I don't want to go too technical into the knowledge here, but there are blockchains that what are called create hashed checksums of data. And so think of that as fingerprints. So data can be stored in different ways. But the blockchain is verifying the fingerprints of those data and that those fingerprints are the same. That in conjunction with it being distributed and requiring a set of node stakeholders or a number of parties to validate the transaction, you have to create consensus among those parties. So in general, if one of those parties got hacked, there would still be, let's say in a node stakeholder community of 12 node stakeholders, if one of those nodes got hacked, the rest of the nodes would be able to validate those transactions and allow things to move forward. So it's really the combination of encrypted data, unique ways of leveraging that data on the blockchain, and the concept of it being distributed and needing multiple validation partners.
Thank you. All right, so we have some sort of detailed questions about some of the sites you mentioned, as well as some of the use cases. Let's see, someone talked about the Kiva Protocol, and then also a question about the India case, whether that was live and was it actually working?
And is it, when you said Kiva, is it Kiva protocol, or is that
Correct.
I'm not familiar with that one.
Okay, a little bit personal.
Oh, I think this one actually came out of Kiva, so that might be right. So, so Kiva, obviously, as the group knows, is a very well-known organization in the microfinance space. In fact, having spent the last 12 years in that prior to being at Figure, we were close partners with Kiva. And the Kiva Protocol is very much focused on creating a credit platform for the unbanked. And this is a huge issue in the financial inclusion space because of the number of people that just don't have access to bank accounts today. And I'll use a country like the Democratic Republic of the Congo, where less than 2% of the population even has access to a bank. So, 98% of the population, millions of people, have no ability to find a safe place to save their money or invest or get access to key services. The big issue why people can't get access to bank accounts is because they don't have an identity, they don't have a credit profile, they don't have a set of documents that proves that they're credible. In fact, many of the people that live in these countries are not recognized by the government or current economic systems. And so the Kiva Protocol in general is focused on helping build the future of credit for unbanked populations. I believe it's a fairly new initiative. It's either late 2018, 2019. I've not been as super close to it, but happy to connect folks on this call with the team there. I have super good relationship and resources with them.
Interesting, thank you. And I think kind of related to that, people had asked some questions about what about folks where there's a literacy or language issues, or some of the basic questions like what if you don't have access to a cell phone, or if their cell phone gets broken or stolen, is it someplace they'd be able to access it if they were to go into a lending institution or a bank or something like that? How does that work?
Yeah, so the cell phone in general is the best platform for, I would say, emerging market unbanked people to access blockchain technology. The benefit of the technology is that because it's distributed, if their cell phone gets stolen, their ability to, as a permissioned member, leverage whether it's biometric technology or their permissioning functions to get back onto that chain is fairly easy. But it's generally driven by either private keys or biometric technology, meaning they need to have a visual of themselves, their eyes, etc. There's some really interesting companies that are coming out of Europe right now that are focused on unique phones that cannot be hackable, that are focused on leveraging blockchain technology for those particular wallets. Obviously, most of the folks on this call have seen or heard of the Facebook Libra project. They're looking at leveraging Facebook, or whether an individual logs into a cafe computer in rural India or in Africa, that leveraging a Facebook account or a social media account for access to blockchain technology could be effective. But I would say we're still very, very much in the early stages of those types of projects. And as you can imagine, the government and regulation is quite strict on where we're at there.
Are you aware of any nonprofits or NGOs, or besides these unique phones, that are trying to produce and make these kind of blockchain accessible phones available to folks who might not have them, just for these kind of purposes? Yeah,
so there's a great organization called the Blockchain for Social Impact Coalition. That organization has an incubator program of early stage entrepreneurs that are tackling some of these projects. And so I've seen a few companies come out of that organization. Right. What I see most of, because we're in the financial services sector, is you have technology providers, you have financial services folks, and they're kind of partnering with nonprofits or organizations that have distribution in those countries. Generally, the technology provider doesn't have the financial services expertise, and then at the same time has kind of the access to the network. And so that's where I really think the concept of public-private partnerships between technology companies, financial services networks, and nonprofits could become really effective.
Great. One of our participants noted that he works for a UK nonprofit called Enduring Net that uses blockchain. It's IBM's Hyperledger Fabric version to address modern slavery and forced child labor eradication, and wondering if you've seen that deployed in similar or other kinds of situations. And maybe you, or maybe we get this person online to explain how is that being used to eradicate child slavery.
Yeah, I mean, so one of the areas I'm deeply passionate about is leveraging the technology for refugees and sex trafficking and slaves. I think there's a massive opportunity for the technology to do that. I'm not familiar with Enduring Net in general. I'm very familiar with Hyperledger Fabric, and I think across the different types of protocols, that one is one of our preferred technology partners. In fact, it was what we based our blockchain off of initially, and is probably one of the most effective for the combination of digital identity and geolocation type data to run through it. Happy to connect with that person offline and share a little bit more about what we're looking at there. There's also there's a ton of groups out of the Stanford Business Center for Social Innovation that is looking at that particular use case, and happy to connect folks with the guys and women that are leading those initiatives.
Great. We just got a comment that someone's the CEO of nethope.org that responds to disasters with shared technologies and fosters digital transformation into a large international nonprofit members, and they ran a device challenge with Google. So it's interesting to share that. Part of the other question folks have been having is, it's blockchain, as you pointed out in one of your first slides, has been around for a while, and clearly with the bureaucracy in the healthcare medical fields, which I'd be the first person to sign up to get a blockchain ID so I don't have to walk down the hall and fill out the same paperwork again. Why is it taking so long to gain traction here? Political will. I know I remember reading an article several years ago about Estonia, like their entire government was trying to go. I don't know if that's still current, but that seems like that came out a long time ago, and that was innovative. And on the daily basis, most of us don't come across blockchain at all, or maybe we do, and we just don't know.
No, I think you're spot on in that scenario. The reason why you're seeing countries like Estonia and others be more forward around blockchain technology, particularly as it relates to identity or healthcare. Dubai is another one who said they completely want to move to a blockchain-based financial services sector. In general, they're smaller countries. They have likely one or two providers that are, in essence, monopolies, and create kind of that third-party system that exists where it's ripe for disruption, and so they have the ability to move more quickly. Where governments are, and think about it, right? I mean, blockchain can cut costs in a significant way, create immediate access, but it does require an investment, right? And so for many governments, they don't want to have their people have access to a single source of value or digital economy, right? It's conflictive with some of the challenges that those countries have. I think in the US in general, the reason why the healthcare blockchain technology has not been adopted nearly as quickly as what we're seeing in financial services is because it is just such a fragmented and siloed industry. And the legacy systems that exist and the insurance system and the parties, there really isn't a significant incentive for everyone to come around a technology and make it better. And so what we've seen is small startups start with, let's call it second tier hospital networks that are striving to get, cost cutting and revenues down, that are more receptive to the technology. I think we're also seeing, younger generations of professionals pushing it inside of their organizations. And so, particularly for unique telehealth type platforms like One Medical or concierge type telehealth platforms, they're embracing blockchain from day one because it's just a natural part of how they're delivering their products and services. so much of the existing ecosystem just isn't there yet and is still operating on, in many cases in hospitals, a completely paper-based solution for records, for data, for tests, for pharmaceuticals. It's really still quite paper-based, and so the investment in that digital future is going to take decades.
Yeah, undoubtedly. A couple of questions. I think you had mentioned several websites that were not as familiar, and I couldn't find them immediately to share with folks. One is BankU. Can you just share what that website is, or how one finds information about that?
Yeah, absolutely. So the company is called BankU, BANQU, and it's BANQU.co. The other organization I mentioned was the Blockchain for Social Impact Coalition. They're a nonprofit that's been started that's, again, focused on both an incubator and programs in the space. Another organization that I'm a huge fan of is called the Digital Chamber of Commerce. As I talked about, in highly regulated industries, getting the government excited about emerging technologies like blockchain is really important. And in DC, there is one organization that serves as the voice for blockchain on Capitol Hill and with the government, and it's called the Digital Chamber of Commerce. We believe that there needs to be, a significant amount of education at the government level in order to get more adoption around thinking about it. And it starts with education. I think, being in the space for the last 7 years, I underestimated just how much people don't know about blockchain. And so I think in order to get the public sector, the private sector, on the same page with what use cases and applications are most important, it really starts with education. And I think the Digital Chamber of Commerce does a really good job of that.
Okay. So the last one was, you'd mentioned Moduloop. Could you just articulate what that website was?
Yeah, let me pull that one up for you guys.
And I think what we may do, just for everyone who's listening, is after the call, I'll pull together. I see lots of people are sharing things, organizations that I've never heard of that they're involved in. And maybe we'll try to pull things together, including, Jennifer, we could tap your knowledge of some other websites and resources if people wanted to learn more about this and how does one get involved or use it. Maybe we'll just pull together some resources when we send out the video. We can share.
Absolutely. I can send over a host of links to organizations and consortiums and the models. Moduloop is MOJALOOP.IU. For reference, and I'll include that in my list. Okay.
I think that's great. We're getting just to the end of our time, and we've got folks I know who work at ID 2020. So, okay, so we're gonna pull all this information together. Thank you, everyone who shared. Somebody was in the NetHope, somebody was in the blockchain Olympiad technology competition. So people are doing really interesting stuff. Thank you for sharing. I may have to get back to you to collect all this information. I think, we have some people that are involved in the international ID, but most of us are in the US and trying to think about, maybe some of us are working in the child slave labor and things like that. But is this something that might be able to help with impact and especially folks who do direct services? Is there, maybe it's connected to the ID, but I think nonprofits are very innovative when they can be with limited tech use and access to resources. So if this is something, it could cut costs, help measure, impact and improve access for their clients. This may be something that our sector, and if there's anything YANA and the folks on this call can do to help educate the public, we'll certainly do what we can.
If I could just make one comment on that, I think it's so important, right? I mean, having spent 12 years in the international development space, measuring impact and how you report impact is so critical. And, being a recovering data scientist and, MBA, in the social space, it's even more important. And one of the most amazing aspects of blockchain technology is this concept of that global audit ledger and tracking. And so when you think about, the implications of that for donors, right? Let's use it at the most simple level. A donor makes an investment. You provide a series of reports to that donor on what that investment did. you technically could have all that already be on the blockchain, just have them log in and see where the impact of their dollar went over, since inception, right? And so I think the transparency and the reporting functions associated with blockchain can revolutionize how nonprofits work with their partners as well as their investors to create a completely transparent kind of end-to-end ecosystem for funding and impact.
Excellent. We could probably do a whole other, we've done programs on metrics and measuring impact. So it's interesting. Hopefully we can learn some more someday about how those of us can incorporate some blockchain technology. Okay, so thank you. We're at the close of the hour. Jennifer, thank you very much for sharing your expertise, and I'll be in touch offline so we can gather some more resources. If anyone on the call, I will try to save what you've by chat or Q&A. Please feel free to send me an email to Rachel, that's RACHEL, at YaleNonprofitAlliance.org. And we'll include this and we'll try to make this as robust as possible to share this information back out to everyone. And keep doing what you're doing and sharing. So everyone, please be well. Jennifer, thank you. I look forward to perhaps we can get you online again.
Thank you for the opportunity. And if anyone has any follow-up questions, don't hesitate to reach out personally.
Great.
Thank you.
Take care. Bye-bye.